G'day everyone, I'm Nic Earner. I'm the Managing Director of Alkane Resources, listed on the Australian Stock Exchange under the ticker ALK. We're a gold miner and existing producer for the last 10 years based in New South Wales on the east coast of Australia, and we also have large exploration projects throughout New South Wales as well.
Nick, good to see you. Haven't seen you since Denver.
Yeah, exactly,
Look
mate.
at us,
Good to see you.
globe-trotting. Welcome to London.
Thank you.
You here for a conference?
Yeah, 121, which is just next door.
Yeah. Expecting. What do you want out of it?
Well, a couple of things. The first thing is we meet institutional investors and high net worth, and it's a means of bringing people together, and better conferences like 121. People come to that, and it's a lot easier to organise the meetings, as well as organising other meetings within London during the time.
Right.
So that's getting our story out there for people to probably buy on market, right? And, people talk to each other around that. That's the main thing, right, is to increase the people interested in our company. The second thing is also, which I know we'll get into, the larger scale porphyry project. Who knows what the funding pathway of that is going forward? So just spending the time to build up people familiar with that story that might be interested in it when whatever time it is comes is an important thing.
What are you seeing out there? Because most conferences that we get kind of feedback on or we attend, it seems to be industry looking at industry rather than institutional corporate funders out there. Is that the kind of vibe at the moment?
Not so much in this type of meeting. Yeah. So, 121 London, some of the conferences in Zurich, Beaver Creek, Denver Gold tend to have institution there as well, rather than more industry-looking industry. Certainly, this type of conference, which focuses on the smaller cap end of the market, does have some industry players looking at what are the exploration they could invest in and stuff like that. Not quite lining up meetings for us, though.
Okay, so you guys have got money in the bank at the moment, which is quite useful. You've got some debt facilities in place too. Just kind of give you a kind of optionality of how you move things forward. Let's look at the different moving parts of your business. So we've got production, we've kind of got development, and we've kind of got a lot of exploration, which you can get after as well. So how are we doing on the production front? Are we going to hit that guidance, 60 to 65,000 this year?
We'll be at the lower end of guidance if we meet it. It's, as I mentioned in the quarterly, we're under a lot of pressure with that, particularly with the development of our new area at Roswell.
Why is that?
The main reason is it's probably 4 to 6 weeks behind what we would have liked it to have been, all right? And that's flat reason. And the second reason is that which is now behind us, a particular area of the ore body in some of our older section of the mines in Coloma 2, we found we had lower recoveries than all the work we'd put in metallurgically to understand in that broader region. So that took us sort of like a one-off hit, and then we're behind where we wanted to be at Roswell. That's disappointing, but it's not really material to the whole of our business going forward.
Right. Okay. And what about costs? I mean, I know the ASX was what
our ASX was very high. It was even despite being a poor performance last quarter, it was at 2,400 Australian, which is at the high end of where we want it to be. That will just normalise when we're mining in Roswell at higher grades. Right. So we've typically been mining around sort of 1.8, 1.9 grams per tonne the last quarter, or 4 or 5 months, but at Roswell that rises back up over 2.3 grams per tonne, which without changing anything about what we're doing, obviously, in the cost base. Right,
and so talk to me about what are the other kind of levers available to you in terms of that driving that cost down? Obviously, production and producing at higher grades is great.
Is the obvious one,
obvious. But what are the other things that you can do? Because obviously, putting more throughput, more ore, etc. But what else?
So it's very interesting. One of the things that we're doing at Roswell. So we're going into a new ore body. We've put a decline down from our existing mine, goes over 2.5 kilometres, arrives, 350 metres odd under the ground.
Yeah.
We've got multiple levels with development done to them that will then start mining. We have a paste plant being built at the top to better ore recovery, but that will increase cost per unit, even though we'll get much better recovery from it. We've been able to build some interesting things into that to increase efficiency. The first one is that we're installing an ore pass. So for people watching us that don't get that, basically we put a hole from top to bottom over a number of levels, and it means that we can have loaders working at this level dumping in the top of the hole, and obviously you never run it empty. And then at the bottom you have a different loader putting it straight into a truck. So what it means is that you reduce waiting time and increase the efficiency, because you can have loading, including remote loading, which you can't interact with live people at that level. You can have that automatically occurring at this level, and then have a person down the bottom loading your truck, and have all your trucks scheduled rather than waiting for this stockpile to get filled and that stockpile to get filled. So we have efficiency things coming in Roswell that we weren't able to do in others, because of the size and nature and geometry of the ore body.
Right. So that'll start to affect the margins, hopefully,
It'll affect
positively.
Margin, and as well as some particular types of equipment that we're investing in that start turning up in July.
Right, and it kind of feels like you're in that phase, because there's a lot of building going on as well, and a lot of concrete being poured, and a lot of erection of various things, and a lot of new equipment. So how does that kind of phase go on for? Because I think what producers are sometimes guilty of is getting money out of the ground and then pouring it straight back in the ground. When the shareholders are sitting there going, well, hey, remember us? So how long does this kind of build out phase, this evolution or growth phase go for?
We really come to the tail end of this current phase in September, October.
Okay.
So December quarter for us should be the inflection point of spending versus cash build again.
Right.
And if not December, definitely the March.
Right.
The March quarter. And the reason for that is most projects, people are familiar with the S curve that occurs, where you sort of spend a little bit at the start and then a whole heap in the middle and then a little bit at the end as you're commissioning. We're sort of well through that centre point in both the paste plant and the flotation and fine grinding. Yeah.
But on the current setup, but obviously you've been doing a lot of drilling, a lot of infill drilling at that, and you're looking at additional projects. You obviously mentioned the porphyry component. It's like, even the reality of porphyries is big balance sheets required, maybe strategic partners required. Do you know what I mean? So I'm trying to go, okay, I get where you're at the moment in terms of production, and I'm looking forward to that kind of increased margin on that component, but then the kind of reinvestment into the other opportunities.
Yeah, so we've actually done most of that investing in the porphyry already. So we've spent the better part of $50-60 million on exploration and some additional money on property purchases as well. We're now at the sort of $5 million a year exploration spend phase at porphyry. Yeah. And the money that we'll be spending is right back to your grassroots air core, RC, the odd diamond hole type, greenfields exploration. And as well as that, in the background, of course, we do environmental work, which is time-consuming but relatively inexpensive compared to other things. So we are really looking to do, a couple of years of cash build and consolidation. We have one more We have one more expansion for the open cuts at Tomingley that we need to schedule in, and I hope to, land that plane in the next couple of months and communicate that to shareholders. But
and so I'm bouncing around a bit here because there's so many different moving parts to this, which is great. But pardon me if you do. So once you kind of get into this more sort of cash consolidation period, from the end of the year, perhaps into Q1 of next year, you look to pay down some of the debt structures that you're using at the moment?
So our debt with Macquarie, and we're currently negotiating, hopefully should have an announcement out. And
renegotiate that, okay.
We're renegotiating as we speak. Yeah. So and the CFO's working on that as we're recording this, right? So we might even have an announcement out tomorrow or the next day, based on that. That's pretty vanilla, right?
Yeah.
All we're doing is looking to extend that debt facility over a further 6 months and change the repayment profile to match our current production profile versus what it was when we put it in place 12 months ago.
Is that securitized against anything?
That's securitized against the assets of Tomingley.
Right, okay. So, and for people watching, as you kind of move through the phases and actually margins increase, the securitization will fall off in different ways. So, okay, so refinancing that out makes sense. And it's only 6 months. Okay.
Only an additional 6 months.
Yeah.
Yeah, well, that's because, we comfortably repay it. So when we went into that debt facility, which was a year and a bit ago, right, we had a 3-year repayment profile, which we're already in. Yeah. Right? We're already in that repayment schedule with repayment starting. We're in the hedging profile and we're in the repayment schedule just starting, right? And so that was going to be paid by the end of 2026. So all we're doing is matching the profile that we find ourselves in now, based on all releases and schedules, and still repaying in a similar time period. So we're only adding 6 months to that, right? It doesn't need to go.
Didn't need it for a year.
Well,
these are all arbitrary dates.
Yeah, it's still repaid over a 3.5-year period, right? So it's not It's not a remarkable.
No, okay. So is that thing. So in terms of coming back to the porphyry component, because obviously porphyry suggests scale, grade, polymetallics, whatever is going on there, you work out in the next 2 years. Like I said, the bigger balance sheets required, but to package that up for bigger balance sheets to come along, companies to come along, the environmental is really important to lead to the permits, which leads to, I guess, hopefully a nice bow tied around this thing for someone else to come in. And what would you look to do there? Would it be a strategic partner to help, actually go and mine this thing? Or is it a case of just, you just need money? I mean, what's the angle?
Well, I mean, both are available, right? So, so we're referring, to the Boda Kaiser porphyry, where we are currently at the very late stages of doing a scoping study for 5 million, 10 million, and 20 million tonnes per annum. Right?
Okay.
And, we can see from, and so in, well, you and I'll be talking in, 5-6 weeks, about this, no doubt. But we can see clearly that a 5 million is cheaper to build than a 10 million, than a 20, and the production profile on a 5, 10, 20, of course, is less and less. And so it depends then on the nature of which path forward we take, right?
Right.
Massive porphyries, as you alluded to, they suit large plants, large production, lower unit costs well, right? Because there's a lot of ore. So we have 650 million tonnes in resource there. So, over 20 years at 20 million tonnes per annum, you want to do that rather than whatever it is, I don't know, 100 years or whatever, at the 5 million tonnes per annum. So, but the scale of the capital precludes almost certainly a company like ours doing 20 million tonnes per annum on its own, right?
Yeah, but it's become fashionable recently to kind of downscale it and companies to try and at least tell the story of being able to potentially do it themselves. We've seen a lot of that.
I mean, there's no doubt that, of course, we could go and do a 5 million tonne per annum.
But it doesn't make sense for you, given the profile of your company now.
Well, it's hard to, I mean, so much of the future is difficult to say, right? But the ore body itself lends itself to doing 10, 20 million tonnes per annum, right?
Okay.
And that lends itself to us seeking a partner. And then that kind of transaction varies and changes depending on the level of risk. So, would we do a type of transaction where someone says, oh, hey, we'll put in $70 million, we're going to earn into 50%. Right? Now, to many of the juniors that you might talk up with, they'll be like, wow, that'd be awesome.
Be awesome, but a lot of those ones are not producers, but you're already producers. But we're a producer. So you've got skill sets.
That stuff holds zero interest to us, right?
Got it.
And it doesn't reflect the value at all of what we have. But if someone walks in the door, and when I say walks in the door, of course we are, we canvass, these parties ourselves, and we have recognition in an investment of the money we've already spent, recognition of the journey that needs to come, which includes approvals and everything like that, and then a mature discussion of how it will be operated. And so all of those things reflect value for our existing shareholders. Of course we'll talk about it, right?
Mm-hmm.
But there are two things we can't do. The first thing is we can't do a transaction that puts very little value on it. Of course not. The second thing is we can't do a transaction that passes the ownership of the timeline to someone else. Mm-hmm. So let's say you sell to a large company and they think, you know what?
I've got all this stuff on.
I've got all this stuff on, but this will really fit if I get a foot on this for 2040.
Yeah.
Well, to us then it holds no value.
Absolutely. You're out of control.
Yeah, exactly. So they're the things that we're not looking at. Everything else is broadly open, but some kind of transaction that shows, recognition of the existing value, that shows that there's a quite obvious path to walk on environmental approvals and other things, and something that also continues to look regionally exploration wise, and then earns in the value on that is attractive to us. Yeah.
So if I'm looking at the Oz market at the moment, we've been part of certainly been involved with a couple of M&A transactions over there, in the sense that you've got people like Perseus who've obviously got their African assets, but they are out being very acquisitive. You've got Westgold, we'll call it merging, not sure it is, with Karora, going on. So these kind of wannabe mid-tiers are looking for resource that will more importantly reserve, in most cases. Based where you are, do you see more M&A happening in Australia? I mean, you're obviously
I mean,
seeing a bit more than we are.
It's interesting for us being a single mine operator on the East Coast, right? So even though our head office is on the West Coast, does
it make a difference? I know Western Australia is not Australia, but in terms of the attitude to West Australian producers looking much further east.
I think it does. I mean, as the most profitable part of Australia, Western Australia. So let's look at sort of the WA M&A scene, right?
Yeah.
Largely, it's been driven by, and we ourselves tried to participate in this a few years ago, but it's been largely driven by synergy, right? So people, if you look at, particularly Ramelius picking up properties to feed their central processing structures, and then maybe with Rebecca, Lady Rowe building a new one themselves, that's an obvious thing in a bit Musgrave, that region. So that's consolidation. If you look at the work that Raleigh's done with Genesis in and around the Leonora district, again, that's the same thing, right?
Yeah.
So it's all consolidation driven, where there are some degrees of synergies, because the Western Australia does have large processing facilities that over their lifetime will need different ore sources. That in general dominates the M&A, as well as the broader separate desire to try and get scale, both de-risking and then attract the ability to go on indexes and index funds, right? Yeah. Because once you get on the indexes, then people will buy on the indexes. Now, a large part of that's due to the fact that there's a sort of a dearth of fundamental type investment and investment funds occurring globally. We could probably avoiding segueing into that, right? So they're the things that are driven M&A. So then if you look at the East Coast, in general, if you look at the gold mines and other mines in the region, you've got, of course, got the behemoth of Cadia, now part of Newmont. You've got Cowal, Evolution. Evolution just bought North Parks, but it's not like those two things are trucking to each other. They're a long way from each other. You've got ourselves, and you head out sort of Mineral Hill, Tritton as part of Aeris, and then you head out into the Cobar region. None of those are, I'm going to be trucking from here to here to here. Maybe some of the stuff out in and around the Cobar region can do that.
Yeah. So
that removes the consolidation aspect of M&A within New South Wales, unless the company also owns assets in WA. And what it leaves is simply the size and scale aspects for M&A.
Yeah.
And in general, the different states within Australia tend not to look outside themselves. Some companies, of course, like Evolution or Regis and others that are large enough to do that. But because there are subtleties and differences in the approvals and benefits of each state, and so people tend to stick inside their jurisdictions where in the smaller end. Then you reach a trigger point, you know, Northern Star, others where you then have the scale to look beyond it.
But where I'm sort of heading with that question is I'm trying to work out the scale of ambition for you guys, or realization for you guys, and say, look, if you're gonna let's say 55,000-ish answers this year, you explain why. It's not of a scale which is going to be of interest for someone to be, although they're going to add answers. You're going to have to make it, let's say, turbo around the porphyry component and show the potential for something bigger, as well as the existing production, as well as maybe lots more exploration, regional targets that you can get after to be of interest. But what are coming back to these levers I like to talk about, for companies like yours, is it a case of get your head down in this high-priced gold environment, take advantage of that increased, I guess, free money, as it were, from, you know, what I don't know what it is in Aussie terms. Was it on a gold 23.50 in US?
Oh, in Aussie terms, so yesterday's spot was 35.50 Aussie.
Right. Okay.
Yeah.
See, you're making some margin in this environment. Consolidate the margin is great, but is it a case of get your head down, stick to your knitting, do what you got to do with the current portfolio of assets, and worry about what the, you know, step change for your business could be in a couple of years' time? Is that the thinking?
For us, not necessarily every business, but for us, that's absolutely what we need to do at Tomingley, right? And to a lesser extent the porphyry, because we need to stabilise our underground, commission paste, and that moves us to being in and around the 80,000 ounces a year, right? So
getting interesting. I say getting interesting.
And then there's a further step we can do with the open cuts, which is a matter of scheduling in for cash flow. Obviously, we want to do it as soon as we possibly can. That then expands the plant a little bit and moves us to 100,000 ounces a year, right? Again, it's slightly lower cost, because each time...
Is that the way to look at it? Because I think, you know, we interviewed Wayne over at West Gold, and he said something quite interesting, which was, when he came in there, he said, look, you know, this isn't about how many ounces, this is about how much money we make, right? So I'm not worried about 230 ounces. I'd rather produce 100,000 ounces but make some money. So I'm had the same conversation with another producer yesterday, and we're saying that, you know, it used to be, because there's some phrases and sayings in the sector, which, and one of them is, you got to be 100,000 ounces a year producer to be relevant, to be interesting, but not if you're not making money. So is it aiming for ounces the right thing for you, or is it aiming for actual cash on the balance sheet?
So each of the things I've described brings in more cash.
Yeah.
Right. So that's the only reason to do it.
Yeah.
I have always thought and completely agree that there's no point having a business for the sake of it. The purpose of the business is to make money. Right. Yeah. And for people of our size and scale, making a lot of cash opens the capacity not just to do the required work for boat or do exploration, but it also makes that, do we turn to looking at giving a dividend? We haven't ever done that, right? I mean, we have spun out different assets and sort of asset type dividend, but we haven't ever done a cash dividend. And that'll be the same for, you know, Wayne Ramelius, who already does a dividend, but, you know, but changing the scale of the dividends in this period of time, right? Yeah. That's one thing. And of course, then there's, you know, do you continue to, you know, look at M&A and get just the disciplines that come from having a larger but not too large group that can actually have the capacity to hire very, very good people at a senior level that otherwise are going to go missing, experts in particular things.
Yeah.
Right? But yeah, completely for us, we're interested in stabilising, moving to Roswell and printing a fair bit of cash. Because if we're doing 75, 80,000 ounces at less than $2,000 an ounce, then every one of those ounces we're making $1,500 clear at the moment, right?
Yeah. So there's the eternal debates whether you do dividends or share buyback or M&A or whatever, all that stuff, right? Blah, blah, blah.
Yeah, so I'm talking about capacity, not actuality, obviously. Yeah.
Right. Yeah. Absolutely. And I think, you know, that's why I'm sort of intrigued in how you're positioning your head, where you are today. And it feels like it's a period of consolidation, driving margin, maybe seems more likely strategic partner to kind of come in and get yourself actually seen as a conservative but a deliverer of projects rather than chasing headlines or, you know, talking a big game and not delivering. You know, show me, don't tell me, right?
Yeah, we've never been a particularly flashy company, that's for certain. You know, so yeah, it's a very interesting thing for us. You know, if you look at our last decade, right? Built this mine, discovered in the 2000s this mine that we got it approved, built it in through 2013, been producing since 2014, transitioned from open cut to underground, discovered extensions to the south underneath the highway.
Yeah.
did all the work on that, drilled that out to reserve level, got that approved then in the state government, and now we're halfway through the build of that, right? That's not many people can do that and do that successfully. And then on top of that, during that decade, we also developed a rare earth thing, put it in a whole separate company, spun it out as well, right? So it's not, and we discovered the Boda and the Kaiser and the porphyry, right? So we don't. For us, this is a continuation of a journey of delivery.
Yeah.
But it's one of the first times that we can make some very serious money.
Right.
Yeah.
Which gets the nub of this, or the rub of this, which is you're very good at doing stuff.
Yeah.
You just described some of the stuff you've been doing, and before that you described some of the stuff you're going to be doing.
Yeah.
But one of the things that I think people in the market will be saying to you is that, well, can you also get focused on the share price? Because you kind of effectively been moving sideways for a long period of time. Long time, right? Okay, there's a bit of volatility in there, but basic trend is sort of sideways. What's the thing that I need to look at and understand which is going to drive the share price?
Yeah, I think it will be the inflection point of moving from spending to building of cash.
Right.
So I think one of the things that's weighed on our share price has been, whilst others have been at a different point of their life cycle and in this last period of gold growth, let's call it 9 months, right?
Yeah.
Particularly the last 6, they have been increasing their cash holdings. Ours has been decreasing because we've been spending on all the stuff we've just described.
I've seen the pictures.
Yeah. And so that, I think changing that will have an effect on some people, right? So that's one of the key inflection points that are coming. The second thing for us is when you've spent millions of dollars drilling out something like a porphyry, just putting any kind of wrapping any kind of how do I understand this, put a value around it, which will come out with the scoping study, is a useful thing. I'm not saying people will then love the result. I'm not saying people will hate the result. But at least people can say, oh, this is a potential value of the result.
Yeah.
I think those two things will provide clarity that lets probably better value get reflected in the share price. Not saying it will, obviously.
Yeah.
And
talk to me just finally. Talk to me about the team that's everyone's been around for a while.
Yeah.
Is it the right team to kind of go forward in terms of this kind of this growth that you hope will happen?
Yeah.
Do you need some fresh blood in there?
Well, so it depends what aspect we want. I don't think our exploration team needs fresh blood because we have, an enviable track record of discovery. Our production team at Tomingley, below sort of myself and others, has people that have been there, 2, 3, 4, 5 years. Some have been there 10, but and they are on in normal metrics. There's
enough mining guys in there.
As productive as anybody. On the thing.
Yeah.
From an M&A perspective, it's not really the space we're aggressively in at the moment, but we do have people with, I guess, unflexed experience in that sit inside our group. In terms of the other things, like let's talk about porphyry or things like that. One way that a lot of value will come for that will be de-risking it, right? And one of the de-risking ways of that will be working through the approvals process, and it'll be working through easements and property discussions and things like that, right? The team that we have has done that. This will be the 4th time we've done that in a decade, right?
In New South Wales?
In New South Wales.
Okay.
Yeah. So, and we've had as many projects approved in New South Wales, which is as a team is 3, the gold mine twice and the rare earths once, as anyone, any company of any size in the state. So I don't think we need, more people for that. That said, right, of course we need more expert advice in terms of really interacting and drumming out any kind of M&A or joint venture or something with a major player, right? I mean, we have legal relationships, we have negotiating relationships, but it's not like we do that every day. We've done lots of joint ventures and stuff like that. And we going right back to Philippines, we did a joint venture with Newmont and then sold that to Regis, right? So I'm pretty comfortable with the teams that were always on the lookout for specific expertise in specific things, if that makes sense.
Okay.
Yeah.
So this year, more of the same, please. Good to see it. In fact, next 4 to 5 weeks, you said.
Yeah. Before the end of June, we should be talking again. Yeah.
Okay. Take you up on that one. We'll see you there.
Okay. Fantastic. Thanks, mate.